Bill, I'd like to ask you about today in the stock market because, and in pretty much all the markets are going crazy right now because the January jobs report came out showing, 200,000 jobs were added in the U.S. January, which was a little bit more. It was good news because in December it was less. There were less jobs added, so interest rates went up, and then the stock market actually plummeted because they're worried, about rising interest rates, and also precious metals went down. The dollar's up. What do you make of this crazy day in the markets today?
Well, I think a lot of us would think the stock market correction is long overdue. I mean, it never corrects. And even today, it's not much of a correction historically, even though it's trying to pretend like a Friday crash or something. It's still not much. And from my standpoint, the gold and silver markets, the gold cartel has been all over it. The dollar's really been hurt of late until today. And yet, gold's been going up for 6 weeks, but it's dink, 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 cap, cap, cap. And silver's been the worst acting market I've ever seen in 40 years in the sense of J.P. Morgan stopping it and not paying the price today with a complete collapse. So it's an interesting time, that's for sure.
Hey, Bill, when we've watched the typical cycle of contracts being issued to absorb incoming demand for gold and silver on the COMEX and LBMA, that cycle was the wash, rinse, repeat cycle that we speak about so often. Do you think that we're any closer to where physical metal demand is going to put a more concerted constraint on the ability for the cartel to play those games?
Oh, that's a key question and a really good one, Eric. I mean, if it doesn't, there's no point in being involved in silver. And, I'm all in. But, I mean, if this cycle doesn't stop, it's going to go on and on and on and on and never end. And the only thing that can stop it is for the physical market to seize up and force these guys, the J.P. Morgan crowd, to cover. I mean, the open interest is at a all-time high level above 200,000 prior to 2016. The old high in the open interest was 193,000. This high open interest of the bullion banks and led by J.P. Morgan selling and selling and selling has kept this thing at bay for years now. And for silver to be back at 1650 after all this time with what other commodity prices have done and so on, it's just ludicrous. And they keep doing it and they get away with it.
No, we see gold, on the other hand, down actually below 1330. I know, last week or the week before it went above 1350, which, 1350, 60 is a really key level for gold. What do you see going forward for gold then, now that it has broken down below that?
Well, anybody can look at a chart. We went straight up since mid-December on a certain angle, and now that the chart's breaking down, and that's what the gold cartel is trying to take advantage of, and to, flush the speculators out. And at some point here, it's all going to change, and none of us know when. But gold and silver, and especially silver, now at 80-to-1 ratio to gold, are the cheapest assets on the planet. And something is going to change and really put the investors, back in these markets. I mean, that's my opinion. And they're just going to take off. And I think one of the reasons you're seeing the markets do what they are today is because the inflation fears are finally taking hold in the United States. And back in 1979, that was when we had, the big move then was interest rates going up and inflation taking off. Of course, the gold cartel wasn't as aggressive back then. But at some point here, a lot of money is going to come into our sector and change everything. And I keep waiting for it.
Now, Bill, regarding silver, you've talked about how what we're seeing in the silver market right now, you haven't seen anything like this in your whole career.
No, and I used to be a pretty big commodity trader and never seen anything like it in 40 years. I mean, you've got, I think J.P. Morgan stopped the silver price over the past many months at the 725 area, something like 25, 27 times. I mean, no market trades like this over and over and over again. And now, they're as of today, they're wiping out the speculators, and the thing's headed for oblivion. It broke below key support at 1680, and something's got to happen to change this cycle, or it's never going to end.
Hey, Bill, periodically you've been asked by mainstream media to appear once in a while on CNBC, and Chris Powell gets invited to Bernie Lowe's show on Bloomberg in Asia. Have you had any luck whatsoever with the mainstream carrying the water, the message of GATA, and being receptive at all when it comes to the manipulation message? Has anything changed in the last couple of years as markets have evolved?
Yeah, it's gotten worse. The last summer, spent a lot of time with the Wall Street Journal, about 50 emails in everybody. They were doing a front page story on the Fed and its gold, and it made the front page, and everything was in it except anything that GATA had to say was taken out, either Chris Powell or myself, completely edited out. And it's been going on this way forever. And I think I've been on with Bernie and CNBC Asia, but the last time I was on in CNBC in the States was with Ron Insana in 1999. Yeah. That's a few years.
So why do you think that is? I mean, it seems like, I don't know. I mean, is there a motive for why the mainstream media is trying to cover this up?
Absolutely. It's a story that can't be told. There's no reason for it. I mean, we couldn't have a he said, she said. We're not allowed to be, it's not allowed to be mentioned. And it's really quite something. And that's how big a story it is, because they don't want it out there of what they're doing to control the gold and silver prices, to affect markets and so on. The U.S. government's involved, and the big press, the money and power behind the scenes know it, and it's just taboo. I mean, otherwise, why wouldn't it be discussed like it is, like everything else is? Go ahead, Derek.
You've literally had television producers come on and squash stories in the can, and editors that come down and squash stories that are being developed for the Wall Street Journal and so forth. I mean, the censorship was overt in your case.
Absolutely. And it's, again, I can't stress enough, this is how big a story it is. And when it all breaks, and it will someday, it will be, I think, the biggest financial scandal in U.S. history, if, in fact, it leads to markets collapsing and people getting wiped out, and everyone's going to say, how could this have happened? And if gold and silver are flying back then, and the gold cartels lost control, then the story will finally get out, because it would have to.
No, you mentioned near the beginning of the interview, when you were talking a bit about the stock market, that I think you said that the stock market was, it's been very overdue for a correction. This week it's down about 1,000 points. Today it's down over 500 points. Do you see it falling further?
Well, everybody who's predicted such has egg on their face, this past year. At some point, when we least expected it, it probably is, put in a serious correction. But, I'm clueless in the sense that the plunge protection team is there all the time to prop it up. But at some time, if something comes out of the blue and unexpected, it could create a real, a fright for many people.
It does seem that the powers that be, the central bankers are taking their marching orders from Basel, Switzerland, and doing their powwows in Davos, have talked more willingly about seeing asset prices being overvalued and giving signals that they might be willing to, follow through a little bit more on their threats to normalize balance sheets at central banks and let asset prices correct. But time will tell. I mean, anytime we've ever seen the S&P 500 approach anything close to like a 5%, 7% correction, the powers that be come in and just goose the markets with liquidity, and they've been doing that for 8 years running. So we have wonderful employment reports coming out that are massaged, and people are assuming that interest rates will be able to drift higher. But we're seeing what that does to the stock market. That, combined with the political turmoil and stress about what's going on with the Trump administration, the memo came out today, and all of that is coloring what's going on in the markets too. So it's going to be an interesting year, because interest rates are going to back up. There really is no way to prevent and reversion to the mean, and we had, for a period of time, 400+ year lows in interest rates. I mean, that's a freak of nature in our markets. We created a freak of nature with our policymakers.
Yes, we have, Eric. And what's interesting to me is that the dollar hasn't been paying much attention until now about with interest rates going up in the United States, and it still looks terrible, and tells me that something is pretty wrong out there, because it's still well below 90, and it wouldn't take much to take it right down again, despite the high.
And it's just so that our audience understands that typically when interest rates would rise, one would expect people to, have long-term expectations for their return of holding on bonds to go up, such that, the assets that they would hold would appreciate as the dollar would go up, increasing demand for U.S. denominated or dollar-denominated assets. That's not happening right now. I mean, all kinds of crazy things in our markets are counterintuitive.
Yeah, it is interesting because it seems like this good jobs report out, at least, the mainstream media is saying this good jobs report, and the stock market crashes. It seems so counterintuitive, like you're saying, Eric.
What that is, though, Elijah, is that people look further out in time, 6 months further out, and then they expect interest rates to be rattling the cages of the equities markets and making the equity market correct further out. So you're seeing a price in right now. And that's how unstable the markets are. We've created this house of cards. That's the problem. This fiat paradigm has distorted every single friggin' market on the planet.
And especially gold and silver on the downside.
Yeah. I mean, they wouldn't have been able to achieve this effort of saving the system in the financial markets were it not for the suppression of gold and silver to be able to pull off, the suppression of Alan Greenspan's barometer, the fear gauge.
Definitely. Now, before we let you to go, would you like to first, starting with Bill, add any last thoughts you'd like to add?
Well, I still hope expect 2018 to be a good year, and as Eric is talking about the rinse cycle, and something ought to come out of the blue to change things that puts the fear into people about what's going on and the stuff that Eric just talked about. And all of a sudden, a lot of the money that's been made, whether it's in the crypto world, the stock market world, and other assets, flows into the gold silver sector. And I expect that to happen. And again, probably will start when we least expect it. But it's coming, and I just hope it's sooner rather than later.
Eric, any last thoughts you'd like to add? The value of precious metals exposure as insurance has never been greater, and the asset relative to other assets has never been cheaper. So it's now a time to accumulate, and what I remind people all the time is to just take a position that will not let you lose sleep at night as you hold it, because insurance is something you want to just hold and forget about. I mean, people can speculate and try to make money off of precious metals moves as well too, but at this time, with the kind of uncertainty that we have in financial markets and with the political overlay that wraps around that, I mean, the value for insurance has never been higher. And people need to just keep that in mind. Hold what you can hold and just hold on for dear life, because these are crazy times.
Cryptocurrency News Channel. Your new future. Thank you. Follow us on YouTube.